Welcome to TradeTheMBI.com. This is John. This report is for the 29th of August, and we kind of flattened out after the big push there. Not a surprise, just kind of a little sideways move. We still have to recognize that we have positive extremes from the beginning of this breakout. Starting to, for the first time, see a little bit of short interest here. We actually could end up with the mouth of a snake opening here to the short side, simply because we have orange rising, steel dipping, and the cyan just about to move above the zero. That becomes a key element getting it to make that final pop. Support-wise, though, you've already got the ABM gold up to 82. We can just click right here and look at these numbers, because you can see the various supports, 62, and then down to 52.47 for the green ABM. All worthwhile in noting, because it's likely that we're going to fill back in some of this move. Wouldn't be surprised. We get the end of the month. Could be rotation going into the beginning of a September, election trade, as the final primaries are starting to finalize themselves, and everyone's getting a clear picture of, what the battleground situations are and how that's going to play out, because it will have a definite impact on projections into the future of what might be expected, whether the House is lost versus not. These things all matter, at least from a broader standpoint. For the unknowns, everything else we can just follow, from rising shakeout to the various other, DOC readings. It becomes pretty straightforward. The biggest unknown that still hangs over it is whether or not you would see some kind of action from Mueller that would throw off expectations. Some people are calling the market rise here a Pence put. These people make up stuff to justify all sorts of things. The reality is we can see money coming in and money going out, and in this particular case we see money jumping into the euro at this particular point, solid rising, but may need a little break at this particular point, especially since we're seeing, in concert with the amount of money going into the euro, shorts adding into the setup, which clearly is an indication that there's some people that still think there's significant risk within the euro. But as we've pointed out before, sometimes that is a catalyst for new highs, like we saw with the market when everyone insisted in, April, May, June, that the market was going to tank, that it was over, blah, 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 blah. And look at where they are now. They drove the market to new highs. This is also another one of those crazy trades. It's like, that rates are really looking to increase, and so you're buying treasuries at the low yield now, hoping to lose more money. And but again, there was this large population that's betting on some kind of economic cataclysm that has not materialized yet. It doesn't appear to be, with 4% plus growth being projected. It seems kind of counter, but this is just what we hear, and this is why I don't trade news. We trade what the readings are, because they make up all sorts of strange things just to justify whatever narrative they want. And maybe they want the economy to tank, but that isn't happening at this particular time. This elevated oil situation, I think you have to look to the Middle East to see some of the growing concerns there. There could be some upside surprises to oil, particularly if that area starts to heat up again with saber rattling from Iran and that. And even not, what you get is just a psychological reaction, which I think most of this is, even though no supply has been affected or whatever. You get that ratcheting up, and it takes much longer for that to ease off. This does add strain, and like I've also talked about too, this is the counter-inflationary trade at this particular time, because I think people have been staying out of gold. We're not seeing any pop there. Cryptocurrency is pretty much stuck in the same channel. Obviously, gold still underperforming dramatically, even though a huge improvement from the shakeout on this little run up here. It just got a little overbought, even yesterday, day before yesterday, and then obviously filled that back in. In this particular case, though, we still have all the things you want to see from a DOC, except for the fact now that from this -7 you're seeing shorts rising into it. It's just getting an ABM retest right there. What it has to do, though, is create a quick pivot from that and have green turn around. In this particular case, we already knew that from the dip below the red line in that, it had filled in, created a little, just a little pop, 50% retrace, next move. This is sort of a classic ABC kind of situation. The reality is, though, until you see some degree of massive inflationary pressure, there's just not that much interest in gold right now because it's a better return to be in the market. Now, when that changes, obviously, I think the prospects for gold will change as well. It's still in high demand. I love pointing these out because these just show these little openings of the snake that I keep talking about, and particularly when you get the green coming from above. It's always nice. Oftentimes they'll happen on a lower shakeout, and it's usually at the beginning of the move. Sometimes it happens at the peak setup. You can see it starting to develop early enough in a bar. Usually you can get, even as much as to the open. And it's one of the few plays that I will be okay with cyan under red, particularly when you're seeing steel crossing below cyan. That is the only weakness portion you're going to get. Does it mean you should expect a whole lot? No, you need to see confirmation develop from it. In this particular case, worked out fairly decent as you continue to have green collapse, cyan rising, so then cyan eventually took over the green here. Got a little sketchy for a bar or two, and then you ended up with the full DOC spread, and that accelerated. And we were right about here. In the previous report, things were looking pretty positive. I posted about this one midway into the day, and we were expecting the lows to come in because we did not get a full reset of orange. And sure enough, we made those lows and then got the full reset of orange. And it's clear to see it when that happens. It was perfect timing. I was responding to a member who popped in to say hi, and it was just a perfect opportunity to point out what the expectation was on that one. And we did come right back up to the highs, started putting in positive extremes, and that's probably where we're headed to fill this one in. Have we filled in some of the other ones from the previous day? No, they still linger, but that can be a while. It's just a matter of waiting for a significant reading and even a change in the daily before that's going to have its day. But needless to say, it's still good to show that, intraday we can just follow these as they are, and you take what it gives you. And in this particular case, it was a decent range down. And you don't have to be perfect on the exit either. It's just always an interesting one. This was 03 and all the way down to 94. But even in the pop-up, when you get the above 50 and you're still maintaining no reset with cyan or anything, there are plenty of opportunities to be able to trade out of it and even add into as things continue to show weakness. So it just becomes flexible, and that's just a risk to reward ratio that everyone has a preference on. Indicators are getting put together. You should be getting an email for the renewals, and we'll be all set to send them out probably on the 30th. That way you have plenty of time to have and make sure it's all set before the weekend. As always, though, trade well. We'll talk to you later.